Okay, thank you everybody for joining us. I hope you had a good lunch, and I guess it's my job to make sure you're awake after your lunch, which I will attempt, and then there's no pressure, right? My name is Apoor Suri. I drive client engagement for SE Ventures. Essentially what that means is we work with clients on a plethora of initiatives, notwithstanding TASConnect, which is an example of how we're engaging clients, and in this case, it was Lenovo. We'll look to unpack a few different themes today in the context of the topic you see on the slide behind me. But those themes also include what's happening in a post-COVID environment in the context of supply chains. What are some of the tech trends and how can they act as enablers? How do you measure success, right? If you're an anchor, how do you measure that your supply chain is taking a digital first approach? And then finally, time permitting, we'll talk about sustainability, especially in the context of the data that supply chain platforms have access to and what that can mean in the context of incentivizing your supply chain. So with that, maybe let's start with introducing our panelists first. I'll pass the mic to Mr. Sujay.
Thanks, Purv. In fact, just so that you know, Purv's probably one of the oldest members of the TASConnect team. In fact, one of the first persons who helped incubate the project. That's trivia for all of you. My name is Sujay. Good afternoon, everyone. It's great to be here in your presence. I'm one of the co-founders of what we call TASConnect today. It's a bank agnostic platform and also an industry agnostic platform, pure play technology platform, which is in the supply chain finance space. We will talk more about it during the course of this discussion. But please, my friend and colleague, Nick, what you've got?
I got one. So, hello everyone. My name is Nick. I'm from Lenovo. I think I got a colleague because we started the problem with them. So eventually, we got the problem solved. Right. So I'm from Treasury for Lenovo Group, and I've been there for over 10 years. And mainly, I'm looking at the commercial financing sector. So working capital is always the main big problem for me to solve now. Yeah, I hope this time I can bring some good ideas for you guys.
Hi, good afternoon everyone. My name is Chun Hao and I'm from Global Financial Services, or GBFS in short. GBFS is primarily a local lender where we serve mostly SMEs and local enterprises, and we provide financial products like working capital loans, factoring, receivables financing, and even venture debts for some of the startups. On the side, I also volunteer at Singapore FinTech Association, where we try to achieve the aim of strengthening Singapore's position as the global fintech hub. So we're doing a lot of work with our fintech members, the smaller tech players, to bring it to the next stage, talking to the regulators and having regular dialogues. Yeah, so that's what we do. Happy to share my experiences with the panel today and everyone here.
Thanks. Good afternoon, everyone. My name is Sid Sarkar. I'm a partner at PwC's International Growth Practice, which is actually a global team headquartered in Singapore. And we support clients in achieving their international growth ambitions, global supply chain transformation, etc. We work a lot in this post-COVID era on helping clients achieve rebalancing and resilience. So really looking forward to the discussion with the panel today. Thanks.
Awesome. So let's get into the first question now. We're going to be talking about COVID and post-COVID, and obviously the last 2-3 years have been interesting to say the least, right? You're seeing sort of partially supply shock-driven inflationary pressures in today's environment. You see interest rates going up, and obviously that there's a sort of implicit risk of cost of goods that are also going up, both to the anchor and the end consumer. Large organizations as well are feeling a fair amount of pain when it comes to deconcentrating their supply chains. Apple's a good example of one that has just done that relatively recently. Now, my first question is going to attempt to kind of give a juxtaposition between what the large anchors see from their perspective in a post-COVID environment and what the SMEs are seeing as well. So let me pass it off to Nick first. Nick, you being part of sort of a large treasury, a large ecosystem of supply chains, both physical and financial, what have been some of the observations from your side in this post-COVID environment, and what are some of the things that Lenovo is doing in this context?
Okay. I think a lot of problems we're seeing right now actually is normal problems that we had before. But the only difference is after COVID, post-COVID, it's like a booster that we're taking. It's like enlarge all the problems. Like for example, we do see a lot of the delays, especially when we're looking at this, for example, the shipment, the safe shipment. Normally costs you about 30 days, and now you see that goes to 60, even 80 some areas. And then when you do the international business, so it goes, most of the things actually ship from the Asian countries and to the Europe, to the Africa, and to the US. And that all this shipping time got quite unexpected longer, and that takes your cash a lot. And there's another thing, another thing is like you got uncertainty about supplies. So sometimes one place got locked down, and then you got impacted right away. We had this experience since the Shanghai lockdown, and then most of the things that we have a very good ODMs actually they're actually in that region, and that impact us a lot because the whole thing is unexpected. So this is also the things we see the supply uncertainty is also enlarged because you don't know what will happen in certain areas, and something happens, and right away you got a problem. So there's another thing is about our distributors. We do see that distributors ask for longer term. I think probably this is most of the things they look. We got a problem. We cannot sell our goods as expected. So I cannot pay you. Very simple as that. And how can I get money? And this is actually all the pressures like centralized at the place where it's a treasury. So basically, when you manage the cash, everything is talking. All the problem turn into actually eventually the cash problem. Because when you get the delays, so you got more cash burning in the whole CCC process, and then you got supply uncertainty. What will happen? Very simply, your procurement will come to us saying we need to buy ahead because we're not so sure that we'll get the supplies on time for next month or next month. And some of the chips that we're buying, they don't have enough capacity to support us. So everyone is rushing for the good. Then extra things you have to burn to buy ahead, and a lot of cash are burning again. And then next is how can I collect those cash? Because right now the people are not buying. Everyone is not willing to buy. So these are all the problems. I think the problem people are used to have, but not that big after post-COVID. So I guess this is what we're looking at, and then we do see that there is a need of us to transfer our current process, our current setups of the supply chain. And I do see a lot of the trends in our procurement side. They introduce AI, they introduce machine learning, all these technologies, because they want to build the supply chain more resilient. Everyone is talking about more resilient, but how they build it, I think there are a lot of thinkings through the whole supply chain. And this is not just a procurement, actually, as the treasury manages the cash. So I think before we work at the backside, so back office, we're sitting there, so we got the request, and then we simply say, simply like me, say, Nick, we need another 500 million. So by 31st of December, sort it out for me. And yes, we'll do that. Okay. But nowadays is, Nick, I want to do that. And I'm sorry, we don't have time because, it's so suddenly you have this problem and they want this money in a short time. So in that case, I think the whole change of the supply chain, including the treasury itself, need to be changed more proactively, got involved in the supply chain.
Yeah, thanks, Nick. I think quite a few interesting points, whether it's technology, which we'll unpack later from an AI or an ML standpoint, as well as the booster bit. But I do want to give that juxtaposition and maybe Chun Hao, what are you seeing from an SME standpoint for the same question that I asked?
Okay. Yep. So SME is a large collective group, in large driver of the economy. I think we all know that it's 99% of our enterprise consists of SMEs. They employ about more than 70% of our local workforce, contributes to, I think, 40-50% of our GDP. So that's as a group, right? But collectively, they are big, but if you look at them on an individual basis, they do not have negotiating power, they are very small, they do not have access to financing lines. So all those problems that Nick mentioned, I think is four folds for these guys out there, right? Usually they are at the tail end of the supply chain. They have no negotiating power, and which means they can't pass on costs to their buyers or their consumers and stuff like that. So a lot of these problems are aggravated now through pandemic, right? So we are seeing two ends of the spectrum for SMEs, right? Those who have hunkered down, managed to pivot. Now they're riding the wave because the economy has come back, the orders are coming back, they're doing well. We have seen a few who has scaled back, started to take cheap government loans, living on government payouts. All these have been dried up over the past 6 months. It's going to be worse over the next 6 months. The loans that they've taken, although they are cheap, the principal repayments are coming back, they're struggling, they're looking for more loans to cover cheap loans. And you can imagine the problems out there, right? So, I mean, it's a mixed bag. Depending on what they have done, we have seen COVID winners out there, changing their pricing model, changing the way they engage digitally, changing the way they engage their buyers, their anchors. We've also seen those who have not used money really well, and times are quite gloomy for these guys.
I want to continue building on this theme, this COVID, post-COVID, and obviously it sounds like a doomsday scenario, and I hope it's not. But hopefully, we can get to a consensus towards the end of this panel. Now, sticking to this COVID theme, and Nick mentioned something about boosters, like he's seeing a boosted problem in this space, as well as new challenges, at least from my view, that's facing treasurers. So if you kind of divide the supply chain from a buy-side perspective, which is kind of your suppliers, and a sell-side, which is your customers, on the buy side, there persists a dilemma or an issue around including preserving liquidity and conserving liquidity. There's challenges around increasing cash visibility. And there's also a very sort of interesting challenge, which again has been boosted, which is protecting the health of your supply chain and the financial well-being of your suppliers. That's on the buy side. And if you sort of flip the equation and go on to the sell side, you have things like, key decisions from a treasurer standpoint is that, do I sort of extend my payment terms to my customers to retain sales, or do I sort of hold on to liquidity and working capital from a CapEx and an OpEx standpoint? So I think there's an interesting dilemma and an interesting equation that's playing out. And the question within that, maybe Sid, I'll go to you first. I know you've just done a white paper, which, by the way, shameless plug, but please do have a read. Give us your macro view, from a consulting standpoint, what are you seeing in this context of the buy side and the sell side?
Yeah, and thanks, Apoorv. And just on the white paper, it also gave us the opportunity to actually, reach out to about more than 100 business leaders globally, get their perspectives on what they're seeing. So some of what I'm talking about today is, what we've heard from these global leaders across sectors. I think overall, at a macro perspective, it's very clear that there is an urgent requirement to enhance financial liquidity across the supply chain. Right, it's not only about the anchor, it's not only about the big suppliers, it's across tier 1, tier 2 on the distribution and sell side. There is a very urgent need to do that. I think the need was always there, but now when we talk more about resilience and withstanding shocks, I think people have realized that they need to take more of an active or bold step in that direction. The second thing which interestingly came out, and usually, again, this is an interesting juxtaposition which we're keen to discuss with the panel, is when shocks hit, the initial reaction is to stop CapEx or to reduce investments in new areas. But I think about, if I'm not mistaken, 85% of the business leaders felt that there is a need to invest in digitalization and automation across the supply chain. Of course, the anchors and the MNCs are, sort of well in that space, but across the supply chain, whether on the distribution or on the buy side, there is an increasing need to invest and ensure that there is greater digitalization. So I think these two macro trends is something that we've been seeing in spite of the shocks. Invest in the right areas, drive digitalization, ensure there is financial stability. And I think specifically on the buy side, the third point which came up more on diversification of risk. So organizations are looking to have more suppliers on board on the buy side, which sort of creates competition, but creates opportunity also for SMEs to enter global value chains and be part of that. So it becomes a much more complex value chain to manage than what it has been historically, hence digitalization, hence the need for financial stability. But I think there is also an opportunity in this challenge to really revamp things and make a stronger model for the future.
Awesome. And Sujay, I'll pass it to you to give your perspective from a TASConnect and some of the other conversations happening in this space.
Good. Paradox of plenty. No, thanks, Purv. We've saved the best for the last one. Just joking, actually. But let me try and first bring this all together in terms of really what does this all mean. Okay. First things first. We look at the challenges in the last 2-3 years. It's been brewing for a while. It's just been boosted up, as we say, because of COVID. The first things that happened is that because of delays in supply and the unreliability of supply, so you've got very little control over timing, the cost has increased, and you've suddenly begun to realize the implications of concentration risk on the supply chain. Okay. Now, this is the first stage where you realize there is a problem, and there's a big problem because if you look at, there's also an increase in cost of procurement. And by the way, if that was not enough, you've got a very, very strong dollar, which has forced countries to increase interest rate, mainly across the board. And that's, again, exacerbated the problem of high cost of borrowing. Okay. So there's not just one problem, there are linked problems here. Now, the first step, as I said, is a realization that there is a big problem. Okay. Now, the question is how we respond to it. And this is where I think, and we will bring in the way technology gets linked into all of this, because the first thing that enterprises like our good selves here, Lenovo and the others have realized is that, look, you need a curated group of suppliers and buyers who are, well, if you can use the word loyal in a loose way, loyal to you. Okay. Now, what happens is when you start diversifying the supplier base, let's take buy side, you start kind of diversifying your supplier base, it's easier said than done. Okay. The first thing is, who is it really that your supplier base is, number one, and number two, how do you reach them? And this is exactly where technology comes in, because the amount of visibility that currently most corporates have is very, very limited. And I'm sure Nick will agree with me that while things are changing, there's a long, long way to go before you have visibility right to the very end, saying, these are my supplier groups, these are the ones who I want to diversify into. And by the way, it's not just about diversification, because there are quite a few anchor clients like yourselves who are chasing that same group of suppliers in that industry. So to be able to curate that group, you will need to ensure that you have the ability to support them financially. And once you reach that point, you realize you need technology. Why? Because technology helps you gain access to information. Now that information, or what we call as business intelligence, gives you insights into who these suppliers are who really matter, number one, and number two, who need to be curated. Okay. And this business intelligence then links, and we will talk as we progress into how this business intelligence can be leveraged to enable banks, okay, to come in and lend, and their ability to underwrite, how can we increase that by using this information. So it's really the bridge between, so you've got the physical supply chain and all the problems that come with it, and then you have technology that serves as a bridge between the physical and the financial supply chain. So we'll go and delve more into that as we progress, I'm sure.
Sujay cheated and went to the next theme before I asked him, but it's also a great segue. We'll be talking, if you haven't guessed, we'll be talking about technology next. So we've heard of a lot of different sort of emerging technologies. Some are proven. I'm talking embedded finance, tokenization in the context of deep tier financing. We talked a little bit about sort of AI, ML, and predictive analytics. Now, what I've seen, and this could be just my view, and we'd love to get the panel's view on this, is while these have shown successful proof of concepts, the scale doesn't necessarily exist. And by scale, I mean, within your supply chain, you don't have a 99% adoption or 90 or even 80% adoption of using some of these proven technologies in the context of, creating a digital and a resilient supply chain. So I guess in that context, I'll go back to Sid again because he's my macro guy today. I would love to get your views on sort of the tech trends, and then maybe Sujay, I'll come to you about embedded finance, and then the rest of the panel as well on different sides of the equation.
Thanks, Apoorv. Sujay will get into the details, but just from a macro perspective, all consultants are macro guys. Just from a macro perspective, I think one of the biggest barriers to driving tech and tech adoption has just been the amount of time and effort that it takes to implement new solutions and get them going. Okay, I would say there is a mindset challenge in many of our clients. Historically they have faced issues in driving large-scale transformation across the supply chain. And imagine if it is a challenge for the client or for a leading player, let's say the anchor in this case in the supply chain, what impact it must have for a supplier who is because he A, does not have any say in what's happening, and B, is very skeptical because there's something new coming which is going to change the way of business. I'm in a precarious situation in terms of what's happening currently. So if we are to drive this change going forward, I think the ease of implementation, getting people onboarded quickly, giving them the comfort that this is a solution which is going to work for them rather than create more issues and challenges, is something that is very critical for the future. And I think we were talking about scalability. I think scalability and implementability, if that's a word that can be used, I think will be very important. And last but not the least, when we come to other discussions, I think there also needs to be a view on benefits. So you were talking about adoption, right? If we are saying there is a 90% adoption rate or there is a 99% adoption rate, is that enough in today's world, right? The solution has been implemented to create a certain impact, and what really needs to be measured is if this is the impact this was the business case for implementing such and such digital solution, is it actually achieving that, and how is that being realized? So adoption is not enough. It needs to move towards benefits. Just my initial macro views.
Thanks for that. And we'll talk a little bit more about sort of how you measure and what are some of the KPIs you should look for as a treasurer or as an SME in the context of adopting these technical trends. But maybe Sujay, Sid mentioned that you'll give a lot of details, so I'll pass the question off to you now.
Yeah, thanks, Sid. I'll pick up from where you mentioned about, I think you're talking about inertia in organizations, be it anchor clients, inertia I'll also probably add to it inertia between not just the anchor clients, but also the banks and financial institutions. Okay, so I've had more than 25 years of experience working in a bank myself, and I know exactly how underwriting happens in banks. Okay, here we are, sitting here, envisioning how the future looks. Okay, keeping to that theme, things will change for the better, but let's construct a view of how this change will take place and how technology comes and binds things together. So when you talk about inertia, the reason why there's inertia is because there are practices that we've been following, both on the anchor client side and the bank and financial institution side, which are age-old. It takes time to change them. Now, the moment we talk, and you mentioned about embedded financing, okay, it's a great concept. We talk about buy now, pay later in a retail context. Very easy to understand, it's been done. The ticket sizes are, by the way, a lot smaller, so it's much easier to have real-time decision making. Extremely difficult to implement in a B2B situation. Now, are we going to get there? Yes, absolutely. And we can, you can note the date today. We spoke about this. I'm sure everyone's speaking about this. It will happen. Okay, but the way it's going to happen is that you need a lot of data. Number one, you need information to be extracted out of that data, which is business intelligence, and then you need to back test it across, years of, this is how banks operate, and you can't get away from there. Now, there will be a stage, so we're already experiencing this, where we're looking at pre-shipment financing, we're using alternate data to provide working capital to, let's say, the suppliers, etc., or even the buyers on the distributor side. Now, there will come a time when we will use this data that we generate out of the interaction between an anchor client and their supply chain, use this data to generate business intelligence, use this business intelligence with a bank to supplement their underwriting. Once that happens, and the banks and financial institutions, and you can relate with this point to now, is once they start getting to see more and more of it, the ticket sizes are going to increase, and the reliance on that underwriting supplement is also going to increase. So we will see embedded finance in its true form, maybe 5 years hence. It will evolve towards that, but it's going to be a long and difficult process to reach there. And I do want to spark this discussion around in terms of what my other fellow panelists think about it, because it's where we want to reach. It's where we want to help banks, financial institutions, and anchor clients to reach.
Cool. So we got sort of the top-down view, if I could put it that way, which is, I am an anchor, I'm a large banker, and this is some of the technologies I think is good for your supply chain. But I remember, when we were sort of on that TASConnect journey, I think one of the opportunities we were looking at is how to bring sort of all the suppliers into one platform, all the banks into one platform, and then leverage some of these new technologies that I talked about before for them. But I guess if you take a step back, and Chuna, would love to get your perspective on this, are you seeing an increasing sort of demand from SMEs for deployment of this new technology, or is it something that's kind of being prescribed from the anchor, and it's something that they have to kind of use whether they like it or not?
Yeah, so from my view, right, I'm more for the later view, which is most of the tech today are anchor-driven, financial services-driven, top-down. Benefits are usually designed from the top down, and as you know, things disappear midway, right? And the guys who are doing the work at the bottom doesn't get the benefit, and which is why we talk about sustainability doesn't happen. So when the problem about these anchor-driven tech initiatives or programs is that the poor SME guy who serves 4 or 5 anchor buyers, they need to log on to 5 platforms just to be digitized. So the irony is that I'm more digitized, but I'm getting more work as an SME, and then on the back of the issues that I mentioned, lower margins at the tail end of problems, I've got to manage 4 or 5 platforms, and I think that is the problem. So the digital adoption is there, but I think SMEs are bearing the brunt. So good example, if you walk into a restaurant today, right, you see one order terminal from Grab, one from Foodpanda, one from, right, and then another 3 payment terminals from different banks. This is the state of the problem for SMEs today. Digitized, but doesn't mean they're more efficient, right? So I'm with Sujay on the future of tech. I think we're getting there. It's just the first step. So you need to have interoperable systems. You need to have a unified system where many of these anchor programs can start talking to each other. And I think when we reach there, the adoption will come, the sustainability will come, right? It's just to add on from what Sujay said from a lender point of view as well, right? Today, when we underwrite a loan for SME, right, they come in with traditional data, which is your bank statements and financial statements. And by the way, SMEs, the joke is that they carry 2 or 3 bank statements, one real one and one for the tax. and you don't know which one to underwrite on. But anyway, we always say these are static data, right? It's a picture of him 6 months ago, right? But the lines and the financing doesn't evolve together with the business, right? They are doing well. There's no way to, on the fly, increase credit limits, on the fly, give them access funding and stuff like that to grow and scale together with their business. But as a lender, I would love to have live data, dynamic data on these platforms where I can see performance data, I can see on the invoice that I'm financing, whether it's going to dilute, whether it's going to get credit notes, whether it's going to get liquidated damages and stuff like that. that would be nice for me, and I can manage my exposure according to real performance and not a picture of you 6 months ago. So yeah, I mean, happy to
exactly
talk
what
more.
you're saying.
Yeah.
Yeah, you're right.
Is there something else you want to mention?
Later,
Okay.
Progress.
I want to follow up with Chunhao again on some of the things that he said. So, I think fully agree there's an element of interoperability, there's a saturation in the system with regards to the offerings. What we've also seen to a degree is incentivization, again, coming from a top-down perspective. I guess the question being, what can an anchor do to incentivize these SMEs? I know they're going to be spoiled for choices, but what is the anchor's role in the context of bringing them onto a certain platform, or is that even the right approach from an SME perspective?
Actually, I'm going to move slightly back. I think the benefits may have to come through, responsible procurement or responsible contracting, right? Yes, you can want these guys to come on, and obviously you can sell the aim of future efficiency and stuff like that. But for them to invest to get there, sometimes the contracts are too short. I mean, in my previous life, I was working for not previous life, my previous employment. Sorry, I only have one life. My previous employment, I was working for Service Cisco, where we were a large members supplier to the airports and government installations, right? And we were working on Excel sheets, and then we told the government actually, for us to deploy in dashboarding, dynamic deployment tools, we need to invest in tech. So give me a 5-year, 10-year contract so that it works out after a while. So responsible contracting is maybe one of the main aims. And then we also talk about maybe rewards-based or incentive-based kind of payouts, where maybe later we'll talk about ESG, we talk about the other things, where you incentivize your suppliers when they do certain actions, they get paid more, right? And these are dynamic information dynamic rewards that gives the supplier a pat on the back when they do something good, right? Not wait till the next price adjustment, because I don't know, I may be loyal to the anchor may ditch me for other reasons later. So my answer is not a really very tech answer, but I think it starts from procurement and contracting.
Thanks. Clear on the answer and the fact that you have 9 lives. I believe you're on the second one, I guess. Cool. So, let's keep progressing through this theme of kind of COVID and technology as an enabler. And Sid mentioned something earlier in the topic about measurement. How do you measure the success of whether your supply chain is healthy, whether it's adopting a digital first approach? So Sid, again, I'll come back to you because you built on that point, and then maybe I'll go to Nick to kind of understand what Lenovo is doing in this context and what are some of the KPIs that they're measuring. Sid?
No, maybe I'll kick off and then we'll be very keen to hear from Nick on what they're doing at Lenovo. I think overall, from a supply chain perspective, I don't think metrics will drastically change. Whether we are talking about cost to serve, whether we are talking about on time in full, whether we are talking about stockouts, etc. I think the basics still remain the same. But now when you add this layer of digital on top, as Surya was saying, in this post-COVID, I think there are sort of probably 3 areas to look at, and organizations need to be cognizant of that. I think the first one, as you rightly said, is more at an adoption stage. So if I'm looking at digital platforms across my supply chain, what is the adoption and usage? Whether it is, how many suppliers, percentage of my supplier base who are on that platform, what percentage of my procurement spend is being driven through that platform and the usage thereof. I think level 2, once you have basic adoption, level 2 is about impact and benefits. That's where it's about, okay, if I'm looking to optimize costs, if I'm looking to reduce my interest costs, etc., what have I achieved across the supply chain since the implementation of the digital product or the digital tool? And the third, I think, the level 3, which, to be honest, many of our clients are still struggling to sort of grapple with, and I think it will create the most impact, is how do we gain data and how do we use the data across the supply chain. So have a collaborative or a connected supply chain is the term we've been using, which ensures there is data flow across. And that data is then leveraged to actually drive decision making, whether it's predictive analytics or AI ML or whatever you call it. But this data-led decision making for the future is actually what will define a well-established, smooth-running, digitally enabled supply chain. Nick.
Yes, I think from my point of view, I just gave some certain examples of what Lenovo has been done to change our supply chain. I think one of the example is just we have a service department. So basically, the warranty for these platforms. So how they adopt the technology. Basically, before it's like they give a basically percentage of the goods we sold. They think that we need to basically store the parts at the different area for all these service partner. So this one is not really accurate because most of them based on the historical data we had, and then they did something like that. So what we recently adopted for the past 2 years is we actually developed our own machine learning AI things to try how to accurately forecast this the parts that are needed in each regions, and then we can basically buy the correct amount instead of I buy 500 million putting in the Asian Pacific, but eventually only 1 million used. This actually happens in the past. But one very funny thing I see in the example is in the AI machine learning, when they do the forecast, they think about the factors that we as normally, I think as a finance guy, I will never thought of that. For example, about the weather, all these things. So humidity of that in that city for a certain period, how long it will be, that will definitely impact the service part. This is a very funny thing. So what I actually learned from these examples is for us is, I think, as I said, Treasury need to be more proactive because the reason we always have is the problem I have always is the forecast, the cash forecast I had from the team is not that accurate. So there is always uncertainties at a certain time. And then when you see actually all these uncertainties caused by the data information that you couldn't get from the supply chain at that time. So a lot of the information suddenly the procurement made the decision, they do certain things. You are the last one to know. They just simply tell this decision has been making. But will all these ones, can we build basically the supply chain with the systems that everyone can be aligned? Because procurement, the supply chain is not just the one. When you're thinking about supply chain, there are a lot of things that I think we're talking about. So, for example, we think about suppliers. So right now, when we're looking at the post-COVID, what we're trying to do is we are asking our suppliers basically to be multi-supplier locations. So which means you have a location in China, all right, please set a factory in Vietnam. Right now, this is what we're doing. And then do another one in Mexico because we have a factories there. And for the factories, we do multi-factories nowadays. We have over 10 factories. We got factories in China, most of them are in China. But now after this, and then we have the factories in Mexico, in US, we have factories in Europe, and we're keep building in India. All these reasons is we want resilience, and then we want to do all these things. But all these setups, procurement get involved, logistics, all these ones, everyone's getting involved. Actually, Treasury also get involved in this. But can we be, like transparent in these systems? Everyone knows this data information. Right away, I get those information. I can make a decision from Treasury side, say how I can support this. Instead of they just saying, hey, Nick, you're rich, we got a few billions in your account, so I don't need to worry about that. Our procurement before the COVID, our procurement never worried about the cash. They don't even think about it because they are the ones spending money. So you don't have money, that's not my problem. That's your problem. That's how they behave, to be honest. And then I think especially in the past 2 years, because before the COVID, I'm also working the same thing, do the supply chain financing, or working all these things. But I don't think the procurement guys is so supportive to the treasury jobs at that time. They don't understand. It's not their issue. It's not they're not very nice. I don't want to talk with finance guys. That's not really, because they don't understand. They don't understand. Eventually, they will be impacted because they want to get some supplies and then you cannot support them. Then they got a shortage and then they cannot deliver. That's a problem. So I think right now we learn how to work together. So we think a lot of from the supply side, and then information we can all, I think the information we can all share nowadays much faster, earlier than before, and they are willing to talk with each other, understand the issues, how we can sort it out, and a lot of things I think are happening right now in Lenovo for the supply chain. I think the logistic is also the thing. They want logistic to be resilient as well. So they're working with their partnerships, or everything's working together. So to build up some certain smart systems. So everyone got involved. And manufacturing, so the factories, all the things they try to basically see what technology works, and where I think they're also testing right now. See, because we don't know the best solution right now in the market. So everyone is trying to test if this works. Our procurement had a project since I think the blockchain, the technology, everyone is talking about that. So they start to build up the project and spend money trying to use the blockchain technology to improve the whole thing. But until now, I don't know what they have achieved. Actually, I'm trying to ask, but I think they are working and they are also using AI, ML, get more involved the technology into it. But I think the main point of ours is collaboration between the procurement and the treasury or finance, we see, should turn into another level instead of what happened before.
Cool. So unfortunately, we're not going to be able to talk about sustainability because we're out of time. But there is a panel tomorrow from 5 to 8, and you're all invited to it. So please do come. It's around ESG and sustainability. I think we have about 2 minutes if there's any questions from the audience.
First of all, great discussion, and just wanted to thank the panel for it. But the question was actually more for Nick as well as Sujay. The question was around the internationalization of supply chains. And you spoke about, Nick, you spoke about your factories coming up across different locations, Africa, Europe. You have sales and procurement happening across for those factories. And then, Sujay, you spoke about the whole sort of TASConnect build out. I wanted to find out how exactly does the internationalization of your journey work out across different geographies to support next journey probably. And that was one question. The other piece was connectivity between ecosystems in different geographies. So TASConnect is probably sort of very focused towards Asia, but there are different ecosystems in different geographies. How do you connect them all to support Nick?
Excellent questions. We're going to be here for the next 3 hours discussing this. But this can actually. This is a question really. I meant it. That this is a question where you just keep peeling layers after layers of discussion around this. Internationalization always follows a client. Okay, so that's at the very basic principle there. I think we believe that the ecosystem revolves around enterprise clients. Okay, so that's a belief, and obviously there are different viewpoints to this. But if you look at a Lenovo, a large enterprise with very spread out, both sides, AP on the accounts payable side and the accounts receivable side, which is suppliers and buyers, we actually follow and mimic the workflow of a client. Okay, so that's principally how we will internationalize. Now, if you add on a layer of regulation, local currencies, and then you start looking at the detail of it, and there's a lot of devil in the detail. Okay, so if you're looking at doing distributor financing at a Indonesia level, for example, or at a level in Vietnam, it requires local funding sources, which means that you'll have to work with local banks there. There'll be imperatives in terms of tax regulations. You might not need an entity in that particular location. But ultimately, all that decision is driven by an anchor client and what their needs are. So that's principally how we follow, how we internationalize. I mean, I'll probably stop there because otherwise we can keep going on forever on this. And we'll obviously have this discussion offline and around. So happy to answer any other questions that you may have. But I think that's fundamentally client, and we essentially mimic the client's workflow. That's how we do it. Anything you want to say?
I think it's generally the whole basically what we're looking at is a business. So when through the business, everything is happened contractually, and then through the system. So as a company, you should have a system. So from our side, what we're trying to do is the business side, we centralize them. So all the decision has been centralized for the procurement, treasury, no matter all this finance, the decision what we make. So it's centralized, and then we give the management power to the locally. So there are different locations. So there are teams that handle it. But system-wisely, they're all connected. So we have a very powerful ECC system, and then everything is all centralized. But the problem is what our ECC system is not, it's not 100% can do anything. So that's the reason why we need help. So that's how what we're trying to do is we find out the needs. So all the things actually is already there, to be honest, in your system. But the only thing is how you can take them in the real time. So what we're trying to work with them is connected with the API, and then we tell them what we want and what are the flows. They build up the flows. Then we hook up with financial sectors, and then we can sort out the problems. But right now, I think this is first step, because first step is we're trying to work. Of course, there are some other places in the worldwide we may not help all the regions, but at least you step one. You can do this, and then step 2, step 3. I think eventually it will be connected together, because it's like a different networks. So.
Thanks. Thanks everyone for your time. It's really intriguing conversation. Really love it. Thank you for your time. Just want to add on, and perhaps there's probably an additional drill in to your question around there as well. And we talked about like top down, we talked about AI ML solutions from a top down perspective. I guess my question is more from a bottom up, right? Your AML solution, so you know that it's really beneficial, we talk about benefits, but you did overcome a lot of challenges. One thing that you mentioned was around collaboration. Can you share some insights or pro tips on how you tackle those challenges to get everybody on board on that AML solution from a bottom up?
I think the bottom up probably your best equipped to know.
I mean, not necessarily AI ML solutions, but sometimes it's really just digitalization or automation. Right? I mean, for us as a local lender, we try to, because again, we have 130,000 SMEs in Singapore, we can't possibly reach every one of them. Some of them refuse to be digitized, they still submit paper invoices to us, for example, right? So our approach is then look at platforms, existing platforms, and try to embed our financial solutions into this platform and work with the data sets already there. So one of the examples that we've done is actually with a local food and delivery platform called Order, ODDLE. And what we've done is we've sat behind them, look at the data, control the money flows from the consumers to the restaurants, and on the back of those data and performance, we are giving short-term loans to the restaurants. And the money gets paid through the payment gateways when they come in, right? So accessibility is a lot faster for them. And for us as a lender, we feel a lot safer because we can control the funds, right? So again, going back to your question, from a bottom-up approach, it's very hard to go to them one by one. We look for use cases in industries, and then the platforms within industries. These are your likes of your marketplaces, your procurement platforms, your B2B ordering platform, B2B2C platforms. And this is where data resides, and we think about how to underwrite with those alternative data together with traditional data sets to offer financial solutions that typically is not out there in the market.
Cool. So we're out of time, and we overran, which is always a good sign. I want to thank my panelists for the conversation today, and I want to thank the audience. Stick around. There's 2-3 more panels happening, and you can always speak to them outside. Thank you.
Thank you.